long-term debts as well as long-term provisions. That's important. In the illustrations which we shall discuss today, we have taken long-term debts as well as long-term provisions. We shall discuss it. Then the important part is capital employed. First approach, second approach, there are two approaches. First we discuss illustration number 1, then we discuss this matter. So we come to the next page. Illustration number 1 we shall first discuss. It's a very simple illustration in which we are going to discuss debt to capital employed ratio. Below a formula is given. Debt to capital employed ratio, long-term debt, debt means long-term debts. Long-term debts upon capital employed. In the balance sheet given above, you see long-term debts are two. Actually, non-current liabilities are known as long-term debts. So long-term borrowing 1,60,000 plus long-term provisions 40,000. So long-term debts in this illustration number 1 are exactly 2 lakh. Long-term debts are actually 2 lakhs. And then capital employed. On the next page, capital employed. It shall include share capital, reserve and surplus, long-term borrowings, long-term provisions. That is capital employed rupees 8 lakh. This is the liability side approach. This is called liability side approach. Where in this approach, we focus ourselves on liability side of the balance sheet, which includes share capital, reserve and surplus, long-term borrowing and long-term provision. That will be capital employed. Remember, while teaching to the students, it is to be emphasized that in the first method, we don't include current liabilities. That's important. The first method, remember, from liability side approach, we do not include current liabilities at all. In the examination, suppose current liabilities are also given, they should be ignored. Only share capital, reserve and surplus, long-term borrowings, long-term provision, the total is 8 lakh. Out of this 8 lakh, 2 items are to be deducted. They are not given in this question, but 2 items need to be deducted. Number 1, non-trade investments given on asset side. Non-trade investment given on asset side, they are to be deducted from this 8 lakh. In this question, they are not given. But of course, if non-trade investments are given, they need to be deducted from this 8 lakh. And number 2, fictitious assets. For example, advertisement suspense account given on asset side. Those 2 items I can repeat because that's important. I'm emphasizing because this is very important. While calculating capital employed from first method, share capital, reserve, long-term borrowing, long-term provision are to be added. Nothing more is to be added. And if there are 2 items given on asset side, they are to be deducted. One is non-trade investments and other is fictitious assets. For example, advertisement suspense given on the asset side, it is a fictitious asset that is to be deducted from this 8 lakh. In this question, those 2 items are not given, but in subsequent illustration, those 2 items will also be given. That is our first method of calculating capital employed. Second method of capital employed, non-current assets given on the asset side. Add working capital. Everybody knows working capital means current assets minus current liabilities. So that will be capital employed. And you see from first method also capital employed is 8 lakh. And from second method also capital employed is 8 lakh. Whether we accept first approach or second approach, capital employed will be same. That's equal 8 lakh. So that to capital employed very simple. 2 lakh upon 8 lakh, 0.25 into 1. This illustration is very simple. Illustration 1. Now one thing I want to bring, since you are teachers, you will frame your questions. One thing I want to focus is that a balance sheet is given in illustration 1. Suppose you do not give a balance sheet. You give only liabilities side. To the student, you give only liability side. And ask them to calculate long-term debt capital employed ratio. In this illustration 1, you see current liabilities are of no value. From first method, current liabilities of 50,000 will be ignored. At present, in the CBSE sample paper also, which they have issued just yesterday, I found many questions in which there are certain items which are of no significance. They are to be ignored at all. More and more questions in the CBSE specimen paper. I found many items, many questions which are to be ignored while doing the question. Illustration 1, suppose you give to your students. Suppose you ignore asset side at all completely. Give only these items on the upper side, liability side. Current liabilities will not be taken into consideration from first method. So, illustration 1. Let us discuss illustration number 2. Illustration number 2. Share capital, general reserve, securities premiums, some items are given. I think you must have read this illustration. In solution, debt to capital employed ratio, long-term debts or capital employed. Long-term debts, we have already discussed. It's quite simple. Calculation of capital employed, I want to emphasize. We cannot adopt asset side approach in this question because assets are not given in the question. So asset side approach cannot be adopted. Suppose in this illustration, they give plant and machinery only. In this illustration, they add plant and machinery rupees 2 lakh. Even then, we cannot adopt asset side approach in this illustration because when we adopt asset side approach, we need non-current assets also and current assets also. So, in this question, only liability side approach will have to be adopted. Student has to decide in the examination whether I adopt liability side approach or I adopt asset side approach. Looking to the items of the question, they will decide. So since assets are not given in this illustration, they will adopt liability side approach. That's simple. Shareholders funds below, share capital, general reserve, security premium, and minus profit and loss. Minus, because it is a negative balance, debit balance, therefore minus. So illustration number 2, to be emphasized that if you read all the items, share capital, general reserve, security premium, P&L, debenture loan. Last item is current liability. Last item is current liabilities. It shall be ignored. We have previously discussed that in this approach, shareholders' funds plus long-term liabilities. Current liabilities will be certainly ignored. Moreover, suppose I put a question to you. In the question, suppose share capital is given 5 lakh. The reserves given 2 lakh and shareholders funds 10 lakh. Debentures 3 lakh. What is the capital employed? In this illustration, what is the capital employed? Certainly you teachers know it. Capital employed means share capital plus shareholders funds. Share capital plus shareholders funds plus debentures. Reserve will be ignored. Why? Because shareholders funds already include reserves. Shareholders funds and they also include share capital. So capital employed is 13 lakh. Capital employed is 13 lakh. Shareholders funds are given. Shareholders fund include share capital as well as all reserves. Total amount of share capital reserve is shareholder. If in the question they have given share capital also, they are given reserve also, and they have given suppose profit and loss balance also, and shareholders fund also. So these items will be because shareholders funds are given. Let us take the question further. Debentures are 3 lakh. Long-term debts 7 lakh. What is the capital employed? What is the capital employed? I think you know it. Debentures will be ignored. Because shareholders funds plus long-term debts. Purpose of this webinar is to bring to your notice that certain questions should be formed based upon the CBSE specimen paper issued just yesterday. In many questions, they have included certain items which will be ignored. Everybody knows to calculate capital employed. There's no problem. Everybody knows shareholders funds plus long-term debts. But the purpose of the webinar is to focus shareholders funds include share capital reserves. And also, if long-term debts are given, they include debentures also. So capital employed simple 10 lakh plus 7 lakh. However, if in this we add, suppose, let me add one more point in this. Non-trade investment. One lakh. Trade investments 1,50,000. What is the capital employed? What is the capital employed? Simple. 10 lakh plus 7 lakh minus 1 lakh. Minus 1 lakh. Non-trade investment will be deducted. There is no use of this because asset side approach we are not adopting. We are adopting liability side approach. We have to look upon the liability side only. Asset side has to be ignored except two items given on asset side. They are to be deducted from this liability side approach. Two items. Which two items? Non-trade investment. And also, suppose they have given advertisement suspense. Advertisement suspense 1 lakh. These two items will be deducted for calculating capital employed following liability side approach. Assets are not to be considered. Suppose they give plant and machinery in this question. Plant and machinery 5 lakh. It has no value. Plant and machinery. Because we are calculating capital employed following liability side approach. So liability side approach. I again repeat. I'm repeating because you have to repeat yourselves for your students. When you teach this thing to your students, you have to repeat again and again. So shareholders fund, I can repeat. It's my habit to repeat actually. Shareholders funds, they include share capital and all reserves. Long-term debts, they include debentures. They include debentures. Two items are to be deducted following liability side approach. Which two items? Non-trade investments and advertisement suspense means deferred revenue expenditure. This is called deferred revenue expenditure. Example is advertisement suspense. These two items are. Why these two items are to be deducted? Yes, suppose a student puts a question to you. Why, sir? Why these two items are to be deducted? First, non-trade investments. Non-trade investment means we have put surplus money with our company. That surplus money is not being utilized in our company. We have purchased certain shares from that surplus money. Suppose we have purchased shares of Akash Ambani, Reliance Industries. Suppose we purchased certain shares of Reliance Industries or Tata Sons, suppose Tisco. Those shares we have purchased because we had excess money with us. That money is not being utilized in our company, in our factory, in our business. That amount invested in investment is not being utilized by us. That is surplus money invested elsewhere. Therefore, non-trade investments are to be excluded following liability side approach. Then a student may put a question to you. Why, sir? Why trade investments are not deducted? Non-trade investment, but trade investment are not deducted. What are trade investments? Trade investment means, suppose our company is X company. There is a Y company also, which is a competitive company. They are our competitors. Y company is our competitors. We purchase certain shares of Y company because we want to have some control over Y company. We purchase their shares in order to have a controlling interest in Y company. we went on purchasing the shares of Y company. They are called trade investments. Why trade investments? Those investments in Y company is helping us in our business. Those shares of Y company. Because in competition also, in having a control on that company also will be helpful in our business. So therefore they are called trade investment. They will not be deducted. Following liability side approach, non-trade investments. Suppose X company has invested in other companies, in Reliance Industries, then they are non-trade investments. They will be deducted. But trade investments will not be deducted. And also, I must repeat, if investments are given and nothing is stated whether they are trade investment or non-trade, they will be treated as trade investments. In the examination, if it is not clear whether the investments are trade or non-trade, they will be taken as trade investments. So that is liability side approach discussed in this illustration number 2. I think we have discussed many points. And now we come to the next illustration number 3, in which we shall discuss asset side approach. Illustration number 3, we shall now focus on asset side approach. Items are given: debentures, provision, land, building, plant, machinery, goodwill, noted. Many items are given. Below, formula is same: debt to capital employed ratio, long-term debts upon capital employed. Long-term debts are same. 6 lakh are long-term debts. Provision means long-term provision. Provision for employee benefits is long-term provision. Retirement benefits, suppose when they will retire, they will be paid gratuity also. That's called provision for employee benefits. So that is a long-term provision. So long-term debts are debentures plus provision for employee benefits in this illustration. Calculation of capital employed following asset side approach. Following asset side approach. You are reading non-current assets plus working capital. In asset side approach, non-current assets plus working capital. This is capital employed. Capital employed is equal to non-current assets plus working capital. In this illustration, simply land and building, plant and machinery plus goodwill. Goodwill is very much a non-current asset. It shall be taken into consideration. Why? Remember, although goodwill is intangible asset, but it is valuable asset. It has got a value. It is a valuable asset. It shall be always added to the non-current assets. Actually, it is purchased goodwill. Nothing is stated in the question. It is purchased because non-purchased goodwill is not shown in the books at all. Only purchased goodwill is shown in the books. Therefore, goodwill, if goodwill is given, it means it is purchased goodwill. It should be added by calculating capital employed. Suppose a student put a question to you. Why, sir? Why goodwill is added? In partnership, the treatment was different. Here the treatment is different. Actually, here goodwill is appearing because it is purchased goodwill. Otherwise, goodwill will not have been there. And secondly, suppose we purchase a business of 18 lakh sundry assets. We make payment of 20 lakh to purchase that business. A business consisting of assets of 18 lakh was purchased by us by making payment rupees 20 lakh. Why we pay 20 lakh? You know, the difference is goodwill. We have purchased 2 lakh for goodwill. It is a purchased goodwill. We have purchased goodwill of 2 lakh. It is purchased goodwill. It shall appear in the books and it is a valuable asset. It will be added to non-current assets. Again, the students put a question to you. Why, sir? We should ignore it? We can't ignore it. Suppose we want 10% return. We have purchased that business. And we want at least 10% return on capital employed. What is capital employed? 20 lakh. We want 10% return. On which amount? We want 10% return. On which amount? We want return on 10% on 18 lakh or 10% on 20 lakh. We have invested 20 lakh. We want return on 20 lakh. So goodwill is a valuable asset. In this chapter, while calculating accounting ratios, it will be certainly added to non-current assets. So non-current assets including goodwill plus working capital. So in this illustration below, working capital is given. All of you know working capital, current assets minus current liabilities. So the question is simple. Difficulty is that in this question, inventory is given 580, trade receivables 360, minus trade payables 240. So working capital in this question is 7 lakh. Looking, it is very simple. Working capital, current assets minus current liabilities, that will be working capital. Again, we have to emphasize. Suppose they say current assets 8 lakh and all these 4 figures. Current assets 8 lakh, inventory 580, receivables 360, payables 240. What is the working capital? Quite simple. Current assets 8 lakh minus current liability 240. Working capital is 5 lakh 60,000. This type of questions should be framed by you teachers for the benefit of your students. Current assets are given and they have given inventory also. They have given receivable also. When current assets are given, naturally, inventory and receivables are already included in the current assets. That is to be carefully seen by the students in the question paper. They have to be alert. Current assets minus current liabilities. Inventory is given, receivables is given. Similarly, trade payables are given. They may given current liabilities also. These 5 items are given. 1, 2, 3, 4, 5. And we have to calculate working capital. Simple. Current assets 8 lakh minus current liability 2 lakh. Working capital. All items shall be inventory, receivables, trade payable, ignored. Because the formula is current assets are given 8 lakh, current liability is 2 lakh, working capital 6 lakh. Certain items are to be ignored, I emphasize. Current assets 8 lakh. Current assets suppose 1 lakh. Cash and cash equivalent 1 lakh. Trade payables 240. Current assets 8 lakh. Cash and cash equivalent 1 lakh. Trade payables 240. What is working capital? Simple. 8 lakh minus 240. 8 lakh minus 240. Because cash equivalents are already included in the current assets. Current assets minus trade payables. So that was illustration number 3. You teachers are requested to frame your own questions based on these questions and give it to your students. We take up illustration number 4. We take up illustration number 4. From the following information, calculate debt to capital ratio. Total debt. Remember, we require long-term debts. For calculating the ratio, we require long-term debts. Total debts means long-term plus short-term. Long-term plus short. Total debts are given, right? Then long-term debts are also given 360. Non-current assets are given. Current assets are given. Cash and cash equivalent is given. The student will have to decide whether to adopt liability side approach or asset side approach. Simple. Share capital is not given. So liability side approach cannot be adopted because share capital is not given or shareholders funds are not given. In the absence of share capital and shareholders fund, liability side approach cannot be adopted. So simple, we have to adopt asset side approach. Following asset side approach, we know following asset side approach, we always know that formula is non-current assets plus working capital. Non-current assets plus working capital. Now non-current assets in this question are 9,60,000. 960 plus working capital. Working capital means current assets plus current liability. Current assets are given, but current liabilities are not given. So that's simple. Long-term debts are given 4 lakh. Long-term asset debts are given. Total debts are given, and long-term are 360. So current liabilities must be 40. Current liability, or we can say short-term debt or current liabilities. They are 40 40. So minus 40. So that's also simple. This question, I want to emphasize about working capital again. 280 current assets are given. Current assets 280 are given. And cash equivalent is given 120. Cash is given 120 and current assets are given, so cash will be ignored. Cash and cash equivalent will be ignored because current assets are given 280. Current assets means all the current assets. In this question, they may give trade receivable also. They may give inventory also. So they shall not be used because current assets are already given. Current assets 280 are already given. So therefore, they won't be used. I have already discussed that. So this was illustration number 4. And in all the illustration number 1 to 4, we have discussed, we have completed now one ratio, that is debt to capital employed ratio. You see, in debt to capital employed ratio, it is quite similar to debt equity ratio, isn't it? This ratio which we have discussed is close to debt equity ratio. Debt equity, what was debt equity? Debt means long-term debts. And equity means shareholders' funds. That was debt equity ratio, which was already in the syllabus. Debt equity ratio means long-term debt plus shareholders' fund. Difference is when we come to capital employed ratio, we add long-term debts to this. That's, you have taught debt equity ratio to your students already. Debt equity ratio, long-term debt upon shareholder funds. Now capital employed ratio means long-term debts are also added to shareholders funds on the lower side. That's the only difference. Anyhow, we come to the second ratio, and the second ratio is fixed assets turnover ratio. Formula is given: revenue from operations divided by net fixed assets. And fixed assets include property, plant and equipment, and intangible assets. And intangible assets. Remember, fixed assets. One thing you know, that Schedule 3 has changed and the term fixed assets is now replaced. In this, there's new terminology: property, plant, and equipment. Property, instead of fixed assets, they use the word property, plant, and equipment, and while calculating this ratio, and intangible assets. So fixed assets turnover ratio, we are calculating fixed assets turnover ratio. Fixed assets means property, plant, equipment, and means plus intangible assets, goodwill. What are intangible assets? Goodwill, patents, trademarks, computer software. Intangible assets means goodwill, patents, trademarks, computer software. They shall be included in fixed assets. For calculating this ratio, fixed assets turnover ratio, let us come state illustration number 5. I presume that you have already read this illustration number 5. Calculate fixed assets turnover ratio from the following information: plant and machinery, accumulated depreciation, intangible assets. This point is to be emphasized to the students that intangible assets are to be added in fixed assets for calculating this ratio. Intangible assets, average inventory, inventory turnover ratio, gross profit ratio. We are taking the solution below. You are reading the solution. Fixed assets turnover ratio, net fixed assets, quite simple. Revenue from operations, average inventory into 5, average inventory multiplied into 5, we get cost of revenue from operations. So average inventory into 5, average inventory into 5, that is 7,20,000 into 5 is cost of revenue from operations. But we require revenue from operations. This ratio will be calculated with the help of revenue from operations. But average inventory multiplied into 5 is cost of revenue from operations. So gross profit is 20% on cost. Gross profit is 20% on cost. So if we multiply it into 120 upon 100, we get revenue from operations. We get revenue from operations. In this question, it comes to 43,20,000. If we focus on gross profit ratio, in this question, it is 20% on cost. 20% on cost. Cost is 36 lakh. GP is 20% on cost. It is 20% on cost. Suppose it is 20% on sales. Suppose in this question, it is 20% on sales. Because when you will frame your own questions, you will give some different. So in this question, it is suppose it is 20% on sales. Then instead of this 120 upon 100, you will get 100 upon 80. Why? 20% on sales means if sale is 100, profit is 20. If sale is 100, profit is 20. Then that means cost is 80. So when you introduce 20% on sale, it becomes 100 upon 80. When you give 20% on cost, it becomes 120 because it is directly on this 20%. We shall charge 20% above this amount. Sale will be 20% above this amount, 120 upon 100. So variations will have to be given to the students. And also, suppose it is 20%. It is not given whether it is 20% upon cost or whether it is 20% on sale, it is not given. In entire accounting ratio chapter, if GP is 20% and nothing is stated, it will be assumed it is 20% on sales. You can write down this. If GP is 20% and nothing is mentioned, whether it is 20% on cost or whether it is 20% on sales, it will be assumed that it is 20% on sales. And 20% of sales make the question a little difficult for the students. Of course, it is now 100 upon 80. 20% on cost is simple. You make the question difficult for the students. Don't give it 20% on cost. While framing your question, you give it 20% on sales. So they should do 100 upon 80. However, in this question, it is 120 upon 100 because it is 20% on cost. So this ratio we have discussed. Illustration number 5 is fixed assets turnover ratio. And last ratio, we come to that. It's very simple. Net assets turnover ratio. I have written in bracket or capital employed turnover ratio. Net assets means capital employed. Net assets means capital employed. So now this third ratio is very simple. They say net assets turnover ratio. Net assets means capital employed. Capital employed we have already learned. It can be calculated from liability side approach also and also from asset side approach also. So capital employed we can calculate. So the ratio is net assets turnover ratio. Turnover we already know. Turnover means sales. That is revenue from operations. So the formula is quite simple. Net assets turnover ratio, revenue from operation divided by net assets. We come to next illustration number 6. You are reading illustration number 6. Plant and machinery, intangible assets, non-current investment. Nothing is stated whether they are trade investment or they are non-trade. It is not clear. So they will be treated as trade investment. If nothing is clear, they will be treated as trade investments. We have already discussed that. Non-current investments are given, but it is not clear whether they are trade investment or whether they are non-trade investments. So if nothing is given, they will be treated as trade investment. Trade investment, they will be discussed. Inventory, including loose tools. Inventory, including loose tools. Loose tools. Sometimes a question is put about loose tools. They shall be deducted from inventory while calculating 3 ratios: current ratio, working capital. Suppose working capital turnover ratio or inventory turnover ratio. For calculating current ratio, loose tools will be excluded from inventory, deducted from inventory. Loose tools will be deducted from inventory for calculating at least three ratios. Current ratio, loose tools will be deducted from inventory. Working capital, where working capital is involved, working capital will be calculated, deducted. Inventory turnover ratio, for the purpose of inventory, loose tools shall be deducted. But loose tools will not be deducted. Loose tools will not be deducted from inventory. You are writing down? Please write down this line. It's very important. Loose tools will not be deducted from inventory where total assets or net assets are required. In a ratio where total assets are required, we do not deduct loose tools because total assets means total assets. Total assets of the business. Now, total assets must include loose tool also. For example, proprietary ratio. For calculating proprietary, what is the formula of proprietary ratio? Shareholders' funds upon total assets. Shareholders' fund upon. When total assets are used, loose tools will not be deducted from inventory. When total assets or net assets are required, in proprietary ratio, we use total assets. So when total assets word is used, loose tools will not be deducted from inventory. Similarly, for calculating capital employed, now capital employed, you know, capital employed means net assets. Net assets. So while calculating capital employed, loose tools will not be deducted. That's the whole theory about loose tools. So loose tools given in this inventory, including loose tools, 20,000 will remain included in inventory while calculating this ratio. So the ratio is quite simple. Given below, it is fully solved, and I think you will do it. So illustration number 7 also is given. I hope you will do that also. So first part of our webinar is completed. In the second part, we shall discuss change in syllabus, dissolution of partnership we shall also take up, and also we shall take up 10 multi-choice questions given to you teachers. 10 MCQs are given. You have to attempt those 10 MCQs and you have to award yourself. You have to award marks to yourself. Out of how many questions? 10 questions. How many you can score correct? Remember, time is limited 10 minutes. There is a 10 minutes break. In these 10 minutes, I give you 10 multi-choice questions. You attempt those 10 MCQs. Your teachers, you are allowed only 10 minutes. For 10 MCQs, put up your answer on the face of your book, and later we will see how many questions you teachers can do. Remember, These questions are taken from CUET entrance examination question paper. Just held now, CUET entrance examination question paper for colleges. They have been picked up from there, and you teachers should prepare your students for that examination also. Therefore, these 10 questions are given, which we shall discuss just after a short break. Thank you very much.
So, sir is just taking 5 to 10 minutes break for a cup of tea. And I'm so sorry, Professor D.K. Goyal sir has given you some work and you people cannot have a cup of tea at your end. Your cup of tea, as given by Professor D.K. Goyal sir, is the 10 questions which he has given you. But I will take 2 to 3 minutes of yours just to give an introduction about the APC books. I am Naveen Gupta. I am the managing partner in APC Books, publishing books under Avichal Publishing Company and marketing by APC Books. We have got team all over the country who are meeting you regularly, discussing about the books, giving you the specimens. In case you find any problem, you can talk to my team, which is placed throughout the country. And in case of any problem, any specimen or any other problem, availability of books, you can just write direct to the company and we'll just see that my sales team meets you and solves your problem. One thing I will certainly request, we need your blessings, we need recommendations. Unless and until you people recommend, unless and until you people tell us where we are lacking or where we lack, we cannot improve, we cannot move forward. And unless and until the books are sold, no commercial firm can survive. We need your blessings very badly. COVID was a very, very bad experience. We could survive, we came out, but just to further strengthen us, we need support very, very bad. This year, I really don't know why the students are so much dependent on WhatsApp groups. They are just sharing the books on WhatsApp. They are just downloading it from the free apps, which I personally feel are very, very old editions, 4 editions, 5 editions, old books they are just trying to get, which is just spoiling their learning, which is just spoiling the authors revising their books for future, which is just creating a problem for the publishers to come forward and come out with new editions. So I request all of you to support us. You are very well aware we are very strong in commerce group. We have got D.K. Golsar's books. One more thing I will like to add. Yesterday, the CPSC has released the sample paper. I have requested Professor D.K. Golsar to prepare sample papers, which he has very kindly agreed, and we shall be releasing those papers as soon as I get the manuscript from. We will take minimum possible time to release those papers. I'm sure whatsoever Professor D.K. Golsar will prepare, it will be very, very useful for the students, and we will try to keep the standard of the examination in mind. And for that, I have requested my business studies author also, Madam Alka Dhawan, to prepare the sample papers for business studies as well. For economics also, Parag Gupta ji is preparing, and we may give 2-3 sets of sample papers by different authors. We have got a very, very strong team for economics now. Professor P.L. Gupta sir, a veteran in the writing of economics books, under his guidance, under the guidance of Professor N.M. Shah, a known person for the statistics books, Shalini Kapoor, Parag Gupta, and now just introduced Anima Jain, a wonderful youngster who has come up with very, very good question answer form books. She had worked a lot for CUET and now she is working for many more new books. So we have just done 4 books for mentor in business studies. The earlier book, case studies mentor, was there. We have revised it, and most of the teachers, we have given the specimen. We have made this available throughout the country. And for 11th class also, our book in question answer form. Of course, Alka Daman has written she has written the textbooks also. Wonderful textbooks, I will say. And on the popular demand of the teachers, we have come out with the question answer form series as well. Textbooks, you very well know that Alka Dhawan's textbooks are very well prepared textbooks, logically developed, lots and lots of, I'll say, uh, graphic representation is there, and we have tried that monotony should be broken. And I was talking of Anima Jain. We have just come up with the two economics books, Mental in Economics for 11th as well as for class 12. A very promising youngster I have got as an author, and I assure you, you will get many more new books from this youngster in very near future. Our textbooks, NM Shah's, BL Gupta sir's Micro, Macro, Indian, which are being assisted by Shalini Kapoor and of course by Parag Gupta. They are already there in the market. TK Goel sir's books, the blessings which we people are getting from you, or like this 11th class book on the demand of the teachers, we have just bifurcated it in 2 volumes as the book was very heavy. And in class 12, you are very well aware that for class 12, we have got part A, which we have got partnership, analysis. Of course, we have got all the ratios and everything is there. In company accounts, I just wanted to share a very important information. If you open the last pages of this book, you will find we have added case-based questions in this book. I'll just show you. These are source-based, case-based questions based on all the 3 books. All the 3 books we have covered, whether it is partnership, whether it is company, whether it is ratios, whether it is analysis, everything has been covered. The case-based questions are given in one book, that is the part 2, volume 2 of class 12. I'm sure the response which we are getting from you, the way you people are sending us your views, your comments, I'm more than satisfied. And I'm sure we shall be serving you the way we are serving today, yesterday, even during COVID. I'm very thankful to my team. I will just like to thank my team who had worked a lot even during COVID to see that you people get the specimen copies. I'm sure by now you must have solved all the 10 questions also, and I'm just waiting for Professor D.K. Goel sir, if he has finished his cup of tea, and he joins in a couple of minutes. I'm just finding out, sir, is sir ready? Is sir ready? 2 minutes more. So I will be boring you for 2 more minutes. I'm sorry. I'm standing in between you and Professor D.K. Goel, and another 2 minutes will be taken by me. Sir, if we are able to get your views directly, we always share your views with our authors. Professor D.K. Goel sir getting calls from many of you very regularly, and if he's able to revise his book, if he's able to give you a good material, it is only because of your activeness. You people had been giving your views to Professor D.K. Goel very regularly, and he's able to incorporate those changes in his books. The same way we are getting for other authors also. And we wish to get these changes, these suggestions very regularly from you. Professor D.K. Goel sir has come. I don't wish to stand in between you and him anymore. Thank you. Please come.
Welcome again. In between teachers have put to me a question about project work. I will take only 2 minutes in that respect. There is no change in project work. Like earlier, leave beside previous year, earlier years, there was one comprehensive project and two specific projects. The same we are not. There is no change in CBSE guidelines regarding project work, but leave aside last year. Leave aside. Before that, we used to prepare one comprehensive project and two specific project. One project should be segments keeping in mind their parameters revenue. That is in our books, those projects are given. Students have to prepare one comprehensive and two specific. And one more thing, I want to bring to the notice of the student. In Viva, teachers should ask only those questions which are related to the file of the student. Suppose a student has prepared a file in which he has discussed a particular project. Viva questions should be asked only regarding that project which the student has prepared in his file. So nothing beyond that. We cannot ask many questions from the student which are not related to the project which he has prepared in his file. Suppose he has prepared a project regarding capital employed ratio. So we cannot put a question to him what is current ratio. Because the knowledge of the student will be tested in 80 marks question, actual knowledge. In project work, only those questions should be asked which are related to the file of the student which the student has prepared. That much. One more point I want to bring to the notice of the teachers regarding project work. CBSE sometimes had issued certain questions which should be given in written test. Nothing beyond that. CBSE has given certain questions which should be given to the student in written test. Those questions are given in my book. After page number 178. After the project work is completed, just after page number 178, there are certain questions, sample questions prescribed by CBSE. Sample questions prescribed by CBSE for written test in projects. Teachers should give these questions to the students. However, they may change the figures. Figures may be changed by the teachers. But these questions should be given the written test to the students. I request you not to give very difficult question to the student in written test, because the purpose is not to test their knowledge. This shall be tested in 80 marks questions. Just simple question, written test, which CBSE has restricted to some area. That was a request to you. Be liberal in project work. Award more and more marks to our commerce students in the project work. That's the request. That was about project work. And now we proceed with our work. Yes, we discuss in the first page of the booklet, which has been circulated to you. There is a page in which we have discussed about change in syllabus. You must have read it, I believe, change in syllabus. In syllabus, one change is regarding dissolution of partnership. I have given illustration number 8. Please open illustration number 8. Please open illustration number 8. Dissolution of partnership. An illustration is given. I think you have read the illustration. Only change is that if the value of a tangible asset in this illustration, tangible asset, realized value is not given, land and building appearing on the asset side is 6 lakh. Land and building in this illustration is appearing on the assets 6 lakh. Below, nothing is given. Whether the land and building has been sold or it has not been sold, and what is its value, nothing is given. So if the realized value of a tangible asset is not given, please read below illustration number 8, note number 1. Below illustration number 8, we are reading note number 1. Below illustration number 8, we are reading note number 1. Realized value of tangible asset, that is land and building in this question, is not given. It will be assumed that it has realized at its book value of 6 lakh. That is, it will be assumed that land and building has been sold at the value given in the balance sheet. Balance sheet value is 6 lakh. It will be assumed that it is sold at rupees 6 lakh if nothing is given. If realized value below is not given, it will be assumed that it has realized 6 lakh. But regarding intangible asset, if value of a intangible asset, realized value is not given. Realized value of intangible asset is not given. It will be assumed that its realized value is nil. It will be assumed that its realized value is nil. Suppose goodwill appearing in the balance sheet. In this question, goodwill is appearing in the balance sheet at 30,000. Also, in this same illustration, patents are appearing in the balance sheet 20,000. These two assets are appearing in the balance sheet on the asset side. Their realized value is not given. So we shall assume that they have realized nil value, zero value. So I can repeat, that is the only change in CBSE syllabus. They have mentioned that if realized value of tangible asset is not given, in this question, tangible assets, land and building is not given, it will be assumed that it has realized at the book value given in the balance sheet. And if realized value of goodwill and patents is not given, the intangible asset is not given, they will be assumed that they have realized zero value. This change, I remind you, they are made on 20th April 2022. So late. You know, books are usually, teaching starts actually in the month of February. And CBSE brought the syllabus only on 20th April, in which they have made 3 important changes. one important change we have already discussed about the accounting ratios. 3 accounting ratios have been introduced, and I remind you, those 3 accounting ratios which we have just discussed, from those ratios, 2 ratios are there in their sample paper issued yesterday. CBSE issued its sample paper yesterday. That sample paper contains 2 accounting ratios which they have added in the syllabus. 2 ratios are given in that specimen question paper. So, one change was that. Second change is tangible assets will be assumed to be realized at book value if nothing is given. If their realized value is given, it's all right. If nothing is given, as realized value assets will be taken at the book value given in the balance sheet. But in case of intangible assets, their realized value will be treated as nil, zero. That was the important change. There's third important change also. There's a third important change which I want to discuss is discount or loss on issue of debenture. You know that loss on issue of debenture will be written off in the first year itself. That you already know. Loss on issue of debenture will be written off in the very first year in which it has incurred. Till now, we used to write off this discount or loss on issue from number 1, capital reserve. Actually, first from security premium reserve. Number 2, from capital reserve. And number 3, from statement of profit and loss. Till now, this was the position that loss or discount on issue was written off from 3 sources. First from security premium reserve, then from capital reserve, then from statement of profit and loss. In the syllabus, they have changed it. Now, this loss cannot be written off from capital reserve. This change they have introduced in their syllabus, that discount or loss on the issue of debenture will be written off, of course, in the first year, but from only 2 sources. First from security premium reserve, and then from statement of profit and loss. In the books, it has been written from capital reserve also, but since they have changed it, the change syllabus was issued on 20th April. In the change syllabus, they say it cannot be written off from capital reserve. So now onwards, loss on issue will be written off from first from security premium reserve, then from statement of. That was the third change they have introduced. These 3 changes they have introduced, which we have now discussed. And an illustration number 9 also I want to take up. I think you have read the illustration. From the following aspects of a company's balance sheet, you are required to ascertain cash from financing activities. What is your answer? Have you done it? Cash from financing activities. Cash from financing activities. Have you done it? Cash from financing. Anyhow, let us discuss. Cash from financing activities. Equity share capital has increased 2 lakh. So first is issue of equity shares. Issue of equity shares 2 lakh. Then security premium reserve, we shall discuss it later. Debentures. First year 3 lakh, second year 4 lakh. Below is given that debentures were issued at a discount of 10%. So debentures. 1 lakh debenture issued at 10% discount means only 90,000 were received from issue of debentures. 90,000 were received from issue of debenture. Interest on debentures. You will calculate, that's very simple. Debentures were issued on 1st July. So you will get it. It amounts to 45,000. On 3 lakh, 12% means 36,000. Debentures have increased 1 lakh, 12% for 9 months. That's simple. Interest on debenture, every teacher will do. It amounts to 45,000, no discussion. So interest on debenture 45,000. Then there is an item, underwriting commission, 15,000 was paid. So that's also a minus item, underwriting commission. Payment of underwriting commission, 15,000. 4 items very clear. Issue of equity shares, 2 lakh. Issue of debenture, 90,000. Interest on debenture, 45,000. Outflow. Underwriting commission. And now we come to the point, securities premium reserve. First year it was 5,000. Next year it is 30,000. It has increased 25,000. So shares were issued. So that means shares must have been issued at a premium. That means shares were issued at a what premium? Shares were issued at a premium, but how much premium? Looking to this, it appears that in previous year's premium was 5,000. Next year premium is 30,000. So it looks that 25,000 has been received. Shares have been issued at 25,000 premium. So 25,000 should also be here. But we have a difficulty in this question. Let us read point number 3. All capital losses were written off. All capital losses were written off. From where? All capital losses were written off. What are the capital losses in this question? Discount on debentures and underwriting commission. These are the capital losses. All capital losses were written off. And naturally, they were written off from security premium reserve. So, a student must prepare a security premium reserve account. Security premium reserve account. Buy balance BD. Buy balance BD 5,000. Buy balance BD 5,000. Opening balance of security premium reserve is of course 5,000. This is the opening balance. And discount on debentures was written off from this. So on debit side, we shall write to discount on issue. On debit side, we shall write to discount on issue. rupees 10,000 was written off from security premium. Also, two underwriting commission. 15,000 was also written off from security premium reserve, and even then there is a balance CD security premium 30,000. Remember, opening balance was 5,000 and closing balance is 30,000. After writing off discount on issue and after writing off underwriting commission, even then the balance of security premium reserve is 30,000. That means shares were issued at premium. How much premium? Total of this side 55. That means shares were issued at a premium of 50,000. Shares were issued by bank 50,000. In these questions, these shares, issue of shares, rupees 2 lakh shares were issued. They were issued at premium. How much premium? Those shares were issued at a premium of 50,000. So this 50,000 will be added from cash from financing activities, and the net result is rupees 2 lakh 80,000. So that is cash from financing activities. I think you have got it. We have to raise the difficulty level a little. We have to prepare our students for CUET examination, entrance examination also, in which these type of questions are given. Actually, all our books of accountancy class 12 are oriented towards CUET examination, entrance examination. You will see most of the chapters we have given multi-choice questions, case-based MCQs also. Case-based multi-choice questions are given in various chapters, and I see in the sample paper issued by CBSE, this sample paper contains case-based MCQ also. Certain case-based MCQs are given in this sample paper, and in our book also. You will see in most of the chapters we have given case-based MCQs because they are the future pattern of examination. In future pattern of examination, in CBSE sample paper also, and in CUET examination, entrance examination college also, case-based MCQs form a part of the syllabus, actually, we can say. So, case-based MCQs, I have picked one case-based MCQ from CUET examination. One question. First, we discuss that question actually. Let us discuss all the 10 questions. Some of them are simple, but some of them are a little difficult. But we have to prepare our students for that level of difficulty also if they want to take admission in colleges. First MCQ, very simple and difficult also. Simple, looking to simple, but difficult also. Which one of the following items is not a part of subscribed capital? Answer is very simple. Number C, forfeited shares. Forfeited shares are not a part of share capital. I give you a question. Please write down. I am giving you a question. Please write down. 10,000 shares were issued, rupees 10 each, fully called. 10,000 share of 10 each were issued, fully called. X holding 100 shares paid only 6 per share and his shares were forfeited. Please write down full question. 10,000 share of 10 each were issued, they were fully called. X holding 100 shares paid only 6 rupees per share and his shares were forfeited. His shares were forfeited. What is the subscribed capital? Question is, what is the subscribed and fully paid capital? What is the subscribed? Remember, I repeat again. 10,000 share of rupees 10 each were issued. They were fully called. All calls were made, they are fully called. X holding 100 shares paid only 6 per share and his shares were forfeited. What is subscribed and fully paid capital? What is subscribed and fully paid capital? Answer is 9,000 share of 10 each. 19,000 is the subscribed capital. That's all. Subscribed and fully paid capital is 90,000. Let us say subscribed capital is 90,000 only. Forfeited shares will not be added to this 90,000. Forfeited share is rupees 600. They will be shown separately. They will be shown separately. Why? Do you think it is subscribed capital? Do you think it is a part of subscribed capital? Subscribed capital means subscribed by the public. Subscribed by the public. These have been forfeited. These shares are not with the public. The public do not have these shares. These shares are lying with the company. They may be reissued. They may not be reissued, but they are not a part of subscribed by the public. Public has not subscribed these shares. Public had already, but they have been forfeited. So forfeited share is not a part of subscribed capital. Question has been picked up from CUET examination. They asked what is the subscribed capital? Answer is subscribed capital is 90,000 and forfeited share will be shown separately below this capital in the balance sheet. Forfeited share will be shown separately below subscribed capital in the balance sheet. They will not add it to subscribed capital. Similarly, let us take another example. Suppose 10,000 shares were issued of 10 each, 8 called. Again, 100 shares were forfeited. Of X, who paid only 5 per share. 100 share of X were forfeited, who paid only rupees 5 per share. So what is this subscribed but not fully paid capital? You have to answer. This is the question. What is the subscribed but not fully paid capital? Subscribe. Write down on your piece of paper what is subscribed but not fully paid capital. Hmm? Subscribed but not fully paid capital. Sorry, it should be 1000. Sorry, it's in earlier example it was one. It was, please rectify. In earlier example also, X held 1000 shares. I'm sorry. X holding 1000 shares, paid only 5 per share. So what is subscribed but not fully paid? That's the question. So subscribed but not fully paid capital 9,000 shares of 10 each, 8 paid, that is 72,000 is subscribed but not fully paid capital. Forfeited shares will not be added to this. Will not be added. They will be shown separately. Forfeited shares 5,000. So forfeited shares will be shown in the balance sheet below subscribed capital, but they will not be added to subscribed capital. In the books, they have been added, but that is a modification. It's a change you must do it. The change is forfeited share will not be added either to the subscribed and fully paid capital or to the subscribed but not fully paid capital. They will be shown separately. So the answer of question was which one of the following items is not a part of subscribed capital? Answer is number C. Forfeited shares are not a part of subscribed capital. That was question number 1. Your answer is correct. May or may not be. Let us take question number 2. Orange Limited took over assets. I assume that you have read this question. Please take only half a minute to read this question. If you have not read it, please take half a minute, only 30 seconds to read this question. Orange Limited took over assets of 7 lakh. You are reading this question. And liabilities of 60,000 naturally. Assets of 7 lakh and liabilities of 60,000 means purchase consideration given is, this question is 6 lakh 30,000. Difference may be goodwill or capital reserve. Purchase consideration 630 and share of rupees debenture of 100 each were issued at 10% premium. Debenture of 100 each were issued at 10% premium. The question is, how many debentures were issued? Let us, we have to pay 6 lakh 30,000. We have to pay 6 lakh 30,000 divided by 1 upon 10. Divided by 1 upon 10. 6 lakh 30,000 divided by 1 upon 10. So we get number of debentures 5727. This is the number of debentures. We have to issue 5,727.27 will not be issued. That means we shall issue 5,727 debenture of 100 each. That will amount to 5,72,700. And security premium rupees 10 per debenture. Security premium rupees 10 per debenture on these debentures. So that will amount to again 57,270. Total amount paid is 629,970. we have to pay 6,30,000. So difference of rupees 30 will be paid in cash. 30 rupees will be paid in cash. So answer is, what is the correct answer? Correct answer is C. C option is the correct answer. Sorry. Answer is D. D option, in which 30 cash has been given. D option is correct. In D option, this amount has been given. Debentures, premium, and cash 30 is given in D option. So D option is very much correct. So they have given a question where the figure is not divisible by 110. Fraction are there. So that was question number 2. Question number 3. Question number 3. I think you've done it. Question number 3. The questions were circulated to you earlier so that you are prepared. So I assume you are prepared, you've done it. And answer of question number 3 is option number C. Question 3, answer is C. Why C? Profit is 1,05,000. First of all, we will deduct rent because it is a charge against profit. It must be paid. Whether there are profit or loss, rent must be paid.